Thanks for the question, as always, Rob.
Yep.
One more look at the disclaimer. All right, D, let's get started. And you're going to look at what
Uh,
feature on MC are you going to go to look for this
so I'm going to
Tesla?
go under the Tesla earnings move. So let's take a look at, hold on a second. I don't think I'm sharing my screen here. Let me share my screen. And I think, so the question was, how does Tesla generally perform the 2 weeks heading into the earnings? And
And
how
then
does it
after.
generally perform after the earnings? So let's say we eliminate the day of the earnings. And we say, well, right up, if we wanted to see, does the stock tend to run up, get bought or pushed higher right into the earnings report? Let's say the earnings comes out, the stock could go up, it could go down. But what generally happens, then following that earnings release? So the question was the 2 week period. And so I went here under earnings. I'm on Tesla and under earnings and earnings moves. I'm going to close this. This is the report that shows us the history, the last 12 quarters. So this report looks at the last 12 quarters, which is like 3 years worth of data, because earnings in Tesla are once a quarter, 4 times a year. And here we see how the stock tended to perform 2 weeks prior to earnings. So starting 2 weeks before, up to the day, up to the close right before the earnings announcement. And here you get the earnings dates, right? So these are the historical earnings dates. And this is the 2 week performance before earnings, okay? Not including the earnings day. So before earnings, and we could see here that the last time, April 23rd earnings, if we look at the 2 week performance, Tesla was down 18%. So didn't run up on that 2 week period. Prior to that, 11%, it was down 2%. So if we just took the last 12 quarters and looked at the statistics, right? Did it show tendency to go up, to go down? What was the average move? What was the average absolute move? We could look at it from that perspective, and we could see that if we averaged out all the moves, it was down 2.9%. Now, Rob did mention an article he read, and I'm not sure what data they used. We could go further. I'm going to just use the last 12 quarters, but I don't know what date, you could go out 10 years or whatever it is, but we're looking at the most recent history. Okay. And I'm sure as you change the data points, the numbers will change too. But this is a quick glimpse of what's going on in the last 3 years. So the average return was negative 2.9%. Well, how frequently did it go up? How frequently did it go down? Right? Because the average could get skewed, because you could see that the returns can vary. Right? It doesn't mean that when it's up, it's always up 5%. When it's down, it's always down 5%. The returns could be varied. They could be small. They could be large. So what about the frequency? Just the number of times out of our observations it was up versus the number of times in our observations it was down. So we see that 33% of the historical observations, the stock increased in that 2 week period. So 33% the stock had a positive return. 67% of the time it had a negative return, negative occurrences. And we could see here, look, red, 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 these are negative. We have some positives here, but you got more negatives than positives. You could just kind of visualize it from this table. What about the magnitude of the move? It was down on average 2.9%, but that's the average of all the moves, right? So if you have a plus 10% and a minus 10%, you average it out at zero. But you could also have a plus 20% and a minus 20%. It'll average out to zero. So the magnitude of the move could be narrow, it could be wide. So how much does it tend to just move in either direction? Is it volatile or not volatile? That's the next question. And that's where we go to the absolute average returns. That's what this is. Absolute converts all the numbers to positive numbers. So then we could look at the magnitude of those moves. And on average, in that 2-week period, the move was plus or minus 9.2%, 9.2%. The biggest move was 18.2%. Okay, that was the biggest. So that was the last time. 18.2%, it was down in that 2-week period. Right. So over a 2-week period prior to earnings, 18.2%. The lowest move was 2.7%, which right here, April 19th, you can see was down, but only down 2.7%. Now, of course, there could be other things influencing it in between. You have a 2-week period. There could be any type of news, or what it could be news specific to Tesla. The market could have gone down. There's lots of factors that play into the stock trading, stock movements. But we're just looking at it from a statistical point of view at this moment. Then you can go in there and see, well, did something happen in this 2-week period that was different, right? That would be further analysis. You would have to go in there and dissect that information. But at least this is pointing out that potentially there was something. Now, what about just the median move? So the median move shows where if we took all the moves, all the 12 observations, right? If we took all of them and sorted them, we could sort them highest to lows, lows to highest, and looked at right in the middle. What's the median move? That's down 5.3%. And the idea there is that the average can get skewed higher or lower because of outlier moves. So when you think of an average, you could have a lot of small moves, but one very large outlier move will shift the average in that direction. So we want to look at, well, what about the moves like right in the middle? Half of the observations were below, half the observations were above this. And you could see here a negative 5.3. So what it's saying is that there's a slight skew to the downside. Oh, I'm sorry, to the upside, because the average is a little bit higher than the median. So we had some maybe bigger moves over here. So then what about the range from the biggest move to the upside to the biggest move to the downside? All right. If we sorted them from highs to lows, what is the best move and the worst move? So we could get at least an extreme range. Does it move in a 1% band? It tended to move in a 1% band or a 5% band. Like what were the extreme levels in those 2 weeks that we've seen? And that's what this is. The maximum move to the upside was up 17.2% over here. The maximum move to the down side was negative 18.2% over here. So you can see you could have very big moves in that 2-week period. Almost 17, 18%. Very, very big moves. So that's looking at it in the 2-week period prior to earnings. Let's now look at it from a different perspective. What about after the earnings? So that after the earnings, now you have more certainty. So going into earnings, I would say there's less certainty because you don't know what the report will be. Did they do well in the quarter? Did they perform poorly? How did they do versus expectations? What does the management say? How are they forecasting maybe or projecting future earnings? Before earnings, that's all uncertain. Nobody really knows. People could start placing positions ahead of time, but there's a big unknown. Then the day of earnings is over here. The information is released, and then that gives traders, investors, everybody, all the participants the chance to reevaluate and reprice the stock. So now that happens, day ends at the close. And now we're back to like where we have more certainty, at least for that earnings period. So the uncertainty for that earnings period is gone because the news is out. People had an entire day to read through it, to find whatever's important to them, reprice the stock, and now we go to the next day. And how does the stock perform heading out of earnings, out of those 2 weeks? So this is after earnings. So you could see here that the next day, just the 1 day performance, the next day it tended to do well. 75% of those observations in the last 12, the stock was higher, right? So we see all these greens over here, 75%, the stock was higher. 25% of those observations, the stock was lower. On average, the return was positive 1.7%, which shows that at least from the bullish side, it was better to wait, see what the news is. And if you like the news, that end of day after it reported earnings, if you measured the end of day after it reported earnings to the next day, the stock tended to perform well, up on average 1.7% with a 75% historical positive move. Okay. What about let's take a look at the magnitude of the move and the median of the move, because I do see some big ones over here, up 11%. Got one up 5%. So let's see the median move here. Oh, actually, let's see the volatility. So first, let's look at the absolute moves. How much did it tend to move up or down? Yes, it was up 1.7%. But what is the potential volatility there? What are you risking? Because, if it's moving around 5, 10, 20, 30%, that's very volatile. It's very risky. So let's take a look at the average move, the 1 day move after earnings. So you can see here, that's plus or minus 2.5%. Okay. So still, has some volatility for 1 day. Got to be aware of that. When you're considering anything, an option or just the stock itself, how much volatility does the stock tend to have day after earnings? And if we just measured the biggest move, that's 11%, and then small move, 0.2%. And we could do the same thing with the median. What was the median move? Up 0.8%. So you can see that the average kind of got pulled higher, but the median move is still positive, 0.8%, with the best move up 11%, the worst move to the downside down 3.7%. So there was a little bit of skew towards the upside, right? You can see here, when it was up a lot, versus when it was down, we don't see, at least in the last 3 years, a big downside move that next day. So I think the question was, what about the next 2 weeks if you held it over the 2 week period? Here, coming out after earnings, we see 67% of those observations over a 2 week period were higher. 33% were the observations were lower. And on average, the return was 8.2%. In other words, if you averaged out all of these. But I do see some big moves, some potential outliers. So let's look at the median. But the average move up 8.2%. This may have had a big part of it. You got 29% move up, 37%. So let's look at first let's look at the magnitude, and then we'll look at the median move. So the move up or down on average was 11%. That's a lot. That's still a lot of volatility. You're talking about 11% move over a 2 week period. That's still a lot of volatility. It's not like it just moves up 1% and sits there in a tight range. There's still a lot of volatility. So you got to be aware, to know that's a lot. That's actually more than the 2 week prior. Right? 2 weeks after earnings, after everything was reported, it tended to be more volatile, even than heading into earnings where you have more uncertainty. The biggest move, 37.6%. The lowest 0.7. So you could see here, even that, a lot of volatility in that 2 week period. It almost seems like, that there's more volatility after. Now, what about the median move? We see that average move was 8.2% if we average everything out. What about the move right in the middle? If we just said, let's sort this from highest to lowest and go right to the middle to see where half the observations were above this, half of below this, and that was 5.8%. Still positive, not as high as the average, but still positive, 5.8%, with the biggest move to the upside, 37.6, biggest move to the downside, 13.4. So this also shows that the magnitude of the moves to the upside were more violent than the magnitude of the move to the downside. At least, like, if we look at it before, they look like, kind of equal here in the 2 week period. But here, at least we saw that there was a pretty big and violent move. And we see that here, 37.6. That was in 2021. So then the question, once we look at this data, say, well, what happened in this 2 week period? We'd have to go back. What happened in this 2 week period? There's another 30% move. What happened there? Because it doesn't necessarily mean that it just went up, right? And nothing happened in between. The next question will be, what happened? What type of other factors played into it that I have to take into consideration that could have caused this big move to the upside, this big move to the upside. And of course, that's, as a trader, your responsibility, it's part of what you do in your research and analysis. But now this data and information is pointing that out for you. So now you know where to look, what to research, and to take that into account when you're strategizing around Tesla. So we're right up almost at the end.
Yeah, that was great. D. Rob did ask, maybe it's something we can look at this weekend. He's like, after the analysis of this data, it'd be interesting to look at different trade ideas at some point next week, or theories, or just for discussion. Perhaps D could discuss how he would look at different trades with this data in mind now.
Okay. Yep.
So I'll copy that. Maybe we can take it down. Actually, unfortunately, we've got 3 minutes left, so we can't really do it. But Michael McRae had a question about an earnings that's coming up tomorrow. Sorry,
Well, tomorrow
Michael.
we're closed.
Yep. Or
Yeah,
it's not
everybody's good.
tomorrow. It's after the close, I think.
Yeah, and I think Friday we're not.
Yeah,
Are-
Friday we're not doing the show, so we won't be back till Monday. So Rob, I'll copy your question down. You actually have a series of questions in a row. I'm noticing now. I'm sorry, there's a little bit of a delay. Mike is reminding everyone for a thumbs up. Thanks, Mayor. And we did have another question about a stock symbol that he thinks maybe the earnings is off. So I'll send that to you as well. That was from Dimitro. And Dimitro, you can email that information that you have to support at MarketChameleon.com. I looked at the press releases and everything, and it looks like our data is right. So whatever you're seeing, please send over, because any issues we want to take care of. With that, D, thanks so much, buddy. You have a great 4th of July, and we'll see you again next Monday.
Yep. Thanks, everyone. Have a great trading day. Stay safe out there. Have a good extended weekend, I guess, and holiday. And we'll be back on Monday.
Yep. And then Tuesday, we do a webinar with Interactive Brokers. I don't know if you want to mention real quick. We do have about a minute.
Yeah. So
what that's going to be on.
Yep. Tuesday at 2 p.m. we have a webinar with Interactive Brokers. They're hosting it, so you have to register with them. It's free, but you register with them, and then you could go in and watch that webinar live. And if you miss it, there'll be a recording. And we're going to do it on is stock volume bursts. We're going to discuss stock volume bursts, what they are, how do you detect them, what they could indicate, how you could strategize around them. So we're going to be discussing all that on Tuesday at 2 p.m. coming up next week.
All right. Perfect. Awesome job, everyone. Thanks so much, D. We will see everyone next Monday. Have a great holiday. Bye-bye.